Now, it would have been next to impossible to have not noticed the dip the market has been going through this week, and it's been very hard not to just sit and stare at the red numbers all day. Now, as somebody who has been preaching not to panic on the red days, admittedly I have been waking up and checking my portfolio just to add that little bit of stress into my day. But in all seriousness, if you are new into the market and this is your first run, it can be a very daunting sight to see. So as strange as it sounds, I think I have spoke to death about my mistakes in the previous run with crypto, but in 2020 and 2021 I very much had the mindset of I was going to be holding crypto until the end of time. I had absolutely zero exit strategy and zero plan on selling, so checking the portfolio or stressing out about red days was never really a part of that for me. So this is something that is kind of new to me, and I guess it's kind of a new mindset, new bad habits that are coming in. But there are always a whole host of reasons and explanations as to why we experience market pullbacks, and today we're going to take a quick look into what has been going on this week that has led to some of the market corrections that we have seen. So first things first, Bitcoin and Ethereum took the first hit, and when they take a hit, the altcoins tend to take a little bit of a gut punch. So why are ETH and BTC decreasing? There are a couple of things that are contributing to this, and it is all very seemingly political. So the US Federal Reserve recently decided to maintain the current interest rates, which are between 5.25 and 5.5%. However, they did hint at the possibility of reducing the rates multiple times throughout the year and into the next, but for now I do believe that they are holding them steady. So this announcement had a big impact on the financial markets, particularly the derivatives market, which is where investors trade contracts based on the future value of assets. Now, a significant portion of these trades involve large sums of money, and many of them are centred around buying call options. So this is indicating a bullish sentiment amongst investors, and this trend has been particularly pronounced in the option markets for cryptocurrency like Bitcoin and Ethereum, so where contracts worth 2.6 billion are set to expire. So some are speculating that this surge in activity could lead to a new all-time high for Bitcoin prices. Now, I always think personally as well, whenever anything kind of involving any government and financial... Let me start that again. Now, I always think personally that whenever any government mentions anything to do with interest rates, finance, taxes, etc., cryptocurrency markets will always take a little bit of a hit with this. It just seems to be kind of as a pattern, really. So we also have the influence of the spot Bitcoin ETF that has seemingly had a little bit of an effect on the market. So over the past few days, there has been a consistent pattern of net outflows from the Bitcoin ETFs, particularly notable in the Grayscale Bitcoin Trust ETF, which is the GBTC. So this has experienced significant withdrawals. So these outflows have not then been offset by inflows into other funds like the iShare Bitcoin Trust, which is the IBIT. So despite the overall net inflows that Bitcoin ETFs have attracted since their introduction, the recent trend of outflows has raised a lot of questions about the sustained popularity of the ETFs among investors. And I think one of the things that is holding them back particularly is the fees that are attached to this is kind of putting a lot of people off of using them. Now, I did find this little chart here it's a few days behind. Today is the 22nd, and I believe that today is actually the fourth consecutive day of outflows. But it's pretty much just a little illustration of this kind of sell pressure that this can put on Bitcoin. So obviously, it's going to have an impact on the price. But this is the same as the volume of inflow that we've seen. So over the past 2 months, there's obviously been significant inflow through the ETFs. And this has actually allowed us to see it's not the only contributing factor, but Bitcoin obviously increased from it was sitting in the 40k bracket up to the 70k that it hit. So it does work in both ways. Now, another impact on the markets right now, and it's not one that I was actually very kind of clued up on, but it is the liquidations that are happening. So from what I have read about when I was kind of trying to work out exactly what the leading causes were for the crypto markets to be pulling back, but when BTC hit under the 64k, and I think it was Monday evening in the USA time, there was over 440 million in liquidations. Now in crypto, I know that obviously we're always talking about super high numbers in the millions of dollars and the billions of dollars. So I think we maybe kind of lost reality of just what a significant sum of money that is. But if you imagine 44 million in like normal banknotes, that is an insane amount of money just to have been wiped out of the market. So obviously $440 million, and I think it was in the space of a few hours actually, being liquidated in that short period of time is going to have quite a significant impact on the price of the markets. So liquidations are obviously when trading positions are forcibly closed, and I think most of these positions were long positions which were obviously betting on the price increasing, but I think it was kind of a bit of a circle. So after the grayscale outflows, the price dropped, and then after the liquidations then hit, because the price dropped from the ETF outflows, it then dropped even more. So it's all just one kind of vicious circle with that, I think. So I do think that a market correction has been coming for the last kind of a week or so. Really, nothing can stay green forever, unfortunately, and it was due for a little drawback on it. But I do think that another contribution to this could be some panic selling going on. Now, this little cartoon here is literally me. That has been all week. Do I buy, do I sell, do I buy, do I sell? And I ended up actually doing nothing. So that's how good that was for me. But it's very, very natural, especially if you're not used to the market volatility in crypto, that when you see everything tanking, you think it's the end, you think everything's going to zero, and then you start to sell. So this is the mindset that we need to try and overcome in the next few months, and I'm just as guilty of it. I was sitting here thinking, okay, maybe I should swap this crypto to that, or maybe I should sell that, take profits and invest in that. But you do have to sometimes stop yourself and have a little stern word and just step away from the phone or the laptop or whatever it is you're looking at your charts on, and just have a sit down and read over what your profit taking strategy is again, and remind yourself that you have 100% got this. You have a plan and you know it's a good plan, you're going to stick to it. You just have to get through these little ups and downs and bumps in the road that are inevitable really when it comes to investing. So one thing that I am trying to remind myself of is that red days are for buying, not for selling. Now, I wouldn't advise just jumping into any old coin. The red days are for really kind of stacking up on your DCA plays in your portfolio, and these should be the projects that you already have conviction in. It's just a good time to load up on those and further your position on them. So it really is just a game of emotions really, and how to control them. And honestly, it is the one thing that people will struggle with, because at the end of the day, it is your hard-earned money and you don't want to seem like it's just being flushed down the toilet. And this is where patience is 100% going to come into it. So one thing to remind yourself if you are throwing a little bit of a wobbly just now is that the bull run has not even started yet. We haven't even reached the Bitcoin halving, and this is the main point that we need to be getting to. So if you're hovering over that sell button, just stop and remind yourself that patience is always going to pay off when it comes to cryptocurrency. So there are people out here a few weeks ago who were all shouting about the bull run has come early and everything's going to stay green forever once more. But historically and realistically, just because a few meme coins hit an all-time high and had 1000x gains in the space of 24 hours, that does not signify the beginning of a bull run. So Bitcoin hit, I think it was around about 70k, and this is a good indication of just how high this can go during the bull run. So we need to be keeping our sensible hats on, take a deep breath, and remember the bigger picture overall. So I hope this was helpful to a few of you out there. Let me know what your thoughts are on the market as it is below, and I will see you next time.